What is up, everybody? Good Monday morning to you. Welcome to the UMortgage Monday Mortgage Market Meeting Update with myself, Sean Grapevine, Director of Agent Direct, based here in Atlanta. And I'm lucky enough to be joined this week, as with every week, by the Mac of the Rate Stack. The man like Jonas Vingegaard riding across the finish line yesterday on the Champs-Élysées of the Tour de France, wearing the vaunted yellow jersey. The man who is always 7 minutes ahead of the competition. The guy who has bips for breakfast. The one who does best efforts with no effort. The Baron of Bips. The Lord of the Locks. He's the Colossus of Credit. His name is the awesome Austin Koenig. Welcome, Austin.
Sean, thank you as always. Didn't know how well you could say, French names or words. I know you had French in your back pocket. That's awesome. Another skill
Thank
seems
you.
to light.
Thank you. I think I pronounced a Danish name with a French accent, so that's I just mixing and matching here. But do you watch or keep up with the Tour de France by any chance? The answer is 100% going to be no, isn't it?
It's gonna be no. Yeah, that's a sport I haven't gotten into yet. So no, not familiar.
Yeah, well, I know you like rich European men racing, because you have a love for Formula One. So I
And
thought that
Canadian.
maybe what's that? And
And Canadian.
Canadian, my boy Lance Stroll. I have no idea. I don't. No spoilers. I didn't watch the race yesterday yet. But yeah. So you got to extend it now. Bicycle racing is like 6 hours per stage. So minimal investment. It happens like 150 days out of the year. So basically, it doesn't take any time, and it's incredibly boring. Uh, but other than that, it's definitely worth getting into. Anyway, I digress here. Welcome to the call. I hope you had a great weekend. Let's dive into to a look at last week, and then talk a bit about today. Any exciting news in the numbers last week?
Yeah, so I'd say last week was a lot of wait and see this week. I mean, it was generally a quiet week, and we're grasping at straws, right? Like Rob was talking about it in his market minutes, like how much initial jobless claims, and that's a weekly measure. Like taking such a micro view of a week, saying like this is the economy's real picture right now, is kind of
Mhm.
a tough picture, but that's what the market basically had to grab onto, especially near the end when the Fed's silent and we're just waiting for bigger data pieces to come in, such as PCE on this Friday.
Mhm.
Uh,
Mhm.
Initial jobless claims is probably not the star of the show this week because we have the Fed meeting Wednesday, and that's going to be at 2 p.m. So, just kind of what the market's priced in, right? We've got a 25 bip hike priced in.
For
Everyone
sure.
should know that that announcement is not going to trigger unless it's a surprise like a 50 bip or
Oh gosh.
no hike
Mhm.
or something like that, which I really highly doubt.
Mhm.
But if that were to happen, market would react very violently, I would say,
Mhm.
for
Mhm.
better or for worse. And then
For
what's
worse.
really going to happen is once the press conference starts, that's when like everyone's rate sheets are going to turn off because what the market needs clarity on is, we had CPI prints look pretty good recently.
Mhm.
We have
Mhm.
PCE coming up. How does the Fed
Mhm.
look at this? And I think the PMI released today, and we talked a little bit before we hopped on here. What is PMI? PMI is like a
I'm about to have it removed. I'm like two payments away.
oh, there we go. Well,
Yeah.
this is
So.
this is completely different than
Oh, okay.
a
All right.
mortgage PMI. So we have to
Thank
put our economist hat on here. Think of PMI like for the most layman's terms ever. It's like the mood ring of like manufacturers.
you. Okay.
So the way you look at it is like, how are you feeling about your market right now? Is it getting better, getting worse, like, staying the same? Like, how do you feel about where you sit in the economy? Like in your view, how do you feel things are going? Um, Europe, the mood ring is not good. Let's just say that. Yeah, like,
Yeah.
and it's
All right.
really
It
surprised.
never
Germany,
is. I mean, honestly, when was the last time they were in a good mood? I mean, they're probably all hungover from the glorious end to the Tour de France yesterday. But other than that, what?
yeah.
it's just always kind of down on the economy.
Yeah, like an American won the British Open, it's they don't like to see that. So
Yeah, I mean, it's just all doom and gloom over there,
exactly. So at the end of the day, that was not great. The U.S. actually had a little bit better print than expected, which
as
doesn't.
usual.
Yeah, exactly. We're just kind of we're
But
laying it on them right now, to be honest with you. But we're in just a better shape. It looks like, even from the manufacturer's point of view, we're in better shape. The economy is a little bit more resilient, and at the end of the day, like where we're reading at is like kind of that soft landing could happen, but don't get your hopes up too much level. Europe is a lot more bearish. Let's just say that, based off of if you just look at PMI. So does that affect the markets? Not as much, and I don't think that should drive a lot of markets unless people are really reaching at straws. Wednesday's the day of volatility, really, to be honest with you, and it's all about that press conference. If you have a loan that you need to get locked on Wednesday and you don't want to be, subject to market conditions, don't gamble. Just get it
hey,
in,
yeah,
rates for
yeah,
release in the morning. It's, after 2 o'clock, 2:30 is really Eastern time is when the press conference kind of starts. Everyone's going to be shutting off their rates because who knows whatever Jerome Powell says could make things go crazy.
yeah. I just yeah, and it's like the best possible news is that you know a very light hint at future possible pauses. They're not going to telegraph the freaking you know the soft landing is in. He's not going to have a party hat on. Like it's not yet. Like there's
Yeah,
the best case scenario here is like your borrower, you get a reprice and your borrower saves $372 on a $500,000 loan. Like that, it's not worth gambling.
not worth gambling. It hasn't been for a while, and I would say that continues to hold true. So, just be prepared for that. Friday's going to be a big day too, depending on how PCE looks. So,
PCP. Hmm.
yeah, PCP, and that's the Fed's like preferred inflation measure. But at the end of the day, they're both indications of the same sort of thing, and we hope to see the trends that CPI pointed to, and core CPI as well. We hope to see that reflect in PCE as well. Keep things consistent between you know a similar measure of the same thing, just different metrics, I guess you could say. So we got to like see that be consistent, and then we go into August, and we're moving right along this year. So it's going to be this year's flying by, but this is going to be a big meeting, and it's going to really tell us, I think, if we get another hike later on this year or not. And the market's really unsure of where to position, to be perfectly honest with you. So it's a big meeting, some big data points ahead, as we kind of you know tread on to uncertainty a little bit.
Yeah. So PCE. What was? I mean, it was in pretty good shape in the last print, right? It was in the threes.
I'd have
And
to, yeah, let
can
me
we?
check.
Yeah, grab your little Bloomberg terminal over there. And PCE, can we kind of conflate that with CPI and core inflation numbers? Like there's that like a 2% PCE or 3% or 4% is kind of means the same thing as a 2%, 3%,
Yeah,
4% CPI. It's measuring it's measuring it's sort of same thing. Yeah.
exactly. Think of it as they're both inflation measures, and whether you're saying I'm looking at PCE, I'm looking at CPI, you're talking about inflation, which is the same thing. And so, yeah, I just double checked. You're right. It was 3.8 was what PCE read at last
Guys,
time we
you heard
saw
it
it
here
print.
first.
So
Soft landing is in. 3.4. Do you have pulled up what the expectations are
well,
coming up?
expectations was 3. So for that's PCE, but for core, we're looking at 4.2 is expected. It was reading at 4.6 prior reading. So
Guys, go buy a new car, break out the champagne, do something dumb. Soft landing is in. Don't worry about it.
don't drive up the
Uh
prices though, please.
right. Yeah, haggle, please.
Yeah.
So okay, well before you go out and celebrate, let's check in on how the excellent capital markets team is doing. If I know we continue to have record lock days and weeks. So I'm sure you guys are drowning in it, but maintaining the ability to go and find new products, new lenders, new services along the way. Last week we talked about some newer lenders that are going to be integrating with Arrive or already have. Any news on that front? Any movement on that front? Any new lenders you want to chat about?
I don't have any new lenders yet that I want to chat about quite yet, but here's I think here's just a kind of quick tidbit on some of the non-agency stuff that we even have at UWM and all the good stuff like non-owner occupied, agency eligible, those sort of things. I think with prime jumbo, especially right now, what I'm seeing here is, the credit box is still kind of thin. We're not seeing like if you look at anything that has above 80% LTV, the pricing is pretty bad because investors aren't really willing to touch higher than 80%. So be wary of that. You might hear something like, oh, we can offer 90%, but you have to pass, you can't be an HPML loan. And guess what? We're going to hit you 4 extra points on the pricing. Is that all right? Like, we're not going to be able to actually make that loan work. At the end of the day, it's kind of, there might be a guideline to make that happen, but it's, with even a perfect FICO, that LTV really doesn't price out correctly to actually be a compliant loan. So be wary of like, what you're being told by AEs or, what's being sold to you. But at the end of the day, what I think is a good thing that could be coming up. So that, keep an eye on your headlines, like with Housing Wire and stuff. We have a great Housing Wire account for all of you guys to read, and there's plenty of great information on there. The Basel Endgame. You'll probably see some headlines on this. This is about bank regulation and how mortgages that they're invested in weight on their risk assets. That sounds like a lot of mumbo jumbo, right? But like at the end of the day, what that means is it might be difficult for banks to keep certain loans or do certain mortgage activity that may open it up for Wall Street and kind of the non-bank players like UWM, all the traditional wholesale people that you deal with to kind of get offered better jumbo products or be kind of the leader price wise on that sort of stuff. So keep an eye on that because as that kind of gets affected, that might put independent mortgage banks in a better position. And so at the end of the day, that's really the world we play in, right? So this will be interesting to see how that kind of plays out and how
What'd you call it?
local
The what
banks.
end game?
Basel. So there's like Basel 2, Basel 1. These are like all like
How do you
different
spell it?
BASEL. So keep an eye out for this. This is kind of like very like compliance, fin regulation, in the weeds sort of stuff, but it does affect mortgages because mortgages kind of get unfairly targeted, but kind of rightfully so after the financial crisis. At the end of the day, like I think most people understand mortgage credit's a lot better than what it used to be. And the actual U.S. consumer as a whole has really good equity, but regulators are going to come in with mortgages, and it kind of helped First Republic fail a little bit. Is doing a lot of below market mortgages that they couldn't sell, at a premium, and it kept them on their balance sheet. And same thing with kind of like how SVB had too many MBSs that were way too discounted, right? So at the end of the day, they still have to focus on that sort of stuff. And so we'll kind of keep an eye out for this. This might open the ability for us to be able to be a better priced jumbo because we all know banks that can portfolio lend at cheap funding rates. They always kind of win that space a little bit more because they just have more efficient capital. But if this risk weighting stuff makes their capital less efficient, it makes the competition a little bit better.
Mhm.
So
Wow,
could be interesting to
kind of a
see.
day, kind of a, I mean, yeah, I'm all for how that benefits us. Kind of a day late and a dollar short on, getting the fix in right here at the end of the interest rate raising, spree we've been on, which is really what causes these, like crises of valuation, right?
So this actually got really sparked again by these bank failures.
Hmm.
It kind of put the fire back under them. I mean, yeah, of course it's short, short and late, but it's reactionary nonetheless. And all the regulation from the financial crisis of 2008 was all comes after the fact, right? They were like, oh, you know what? I think something's a little bit up here. Let's put some regulation in. Once things crash and burn, and billions are
Yeah.
lost.
Again, sorry, Europe. That one was definitely our bad.
Yep.
So we'll take the blame for that. So, well, all right, fantastic. This is going to be some. I've already got it pulled up a Reuters article about it. I'm excited to learn about the Basel III Endgame, the next Avengers movie. Is what that sounds like to me. So we'll let this time together come to an end, and we'll encourage everybody to, as always, if you like it, lock it. Keep looking down the rate sheet, right? Go deeper in the rate stack. Be careful about these 90 LTV jumbo loans. Connor Garrity locked a $3 million loan recently with a paltry $40,000 in discount points. So it is possible to get those deals, but you just really have to be right smack dab in the middle of where UWM in this case wants you to be. So without further ado, I'll let everybody go so they can go get some loans in before the Fed rate decision on Wednesday. We'll keep an eye out eagerly for that. And then everybody take a look at PCE when it comes in at like 2.9 on Friday. And you can thank me for giving you guys the good news in advance. I hope you all have a great day. Thank you, Austin, as always.
Of course. Thank you, Sean. Have a great week, everyone.
See you, everybody.